get into the first session in the rubber industry market review. In this session, Mr. Jom Jacob will be giving an updated report on the natural rubber market review. And let me brief about Mr. Jom Jacob. He is an independent analyst in the global rubber industry. It's more than 3 decades as analyst, resource expert, with experience in analyzing rubber market, forecasting the industry trends, formulating long-term policies, and development plans for natural rubber sector. He got a global network with all the industry players and stakeholders. He also served as a senior economist for 11 years for the Association of Natural Rubber Producing Countries. Before that, he was with the Rubber Board of India as well for the 23 years. So let's welcome Mr. Jom Jacob to give a updated report on the natural rubber market review. Mr. Jom.
Hi all, welcome to natural rubber market review. Last week, the sentiment in market, not only natural rubber markets, it could be equities, it could be various equity futures. Sentiment have been overshadowed by Ukraine war. So in fact, the war, we have seen war getting intensified and markets collapsing, not only for natural rubber market, equities and various other sectors, prices came down because speculative investors kept away from risky asset classes. We have seen prices of risky asset classes coming down, falling down. At the same time, safe haven assets, for example, currencies like Swiss franc, Australian dollar, US dollar, Japanese yen, and also gold going up, because in a period of uncertainty, investors normally go for a safe haven asset classes. So this was the economic and geopolitical background of the week before. In fact, we had a number of positive news which could have given positive sentiment to the markets. We had a number of news, but the overshadowing of the market sentiments by Ukraine war, because of that, the positive sentiment could not be reflected in the markets. So when I say we had a number of positive news, we have a few numbers. For example, US jobs data during February. In February, US non-farm sector added nearly 0.7 million new jobs, which was far exceeding the expectation of the economists. Also, we have seen China PMI, China's Manufacturing Purchase Managers Index, performing better than the previous months or better than what was expected. We have also seen China's export performance, means the total exports during January and February, posting nearly 20% growth compared to January, February last year. And also we have seen the commercial vehicle sales in India posting nearly 20% growth during February. Means a commercial vehicle sale is important for natural rubber because it is in commercial vehicle tires that natural rubber is largely consumed. So although the passenger car and the two-wheeler segment was falling down, the commercial vehicle sector was performing better, nearly 20% growth in February compared to the previous February. So all these, also we have seen China coming out with the new targets, economic target, GDP target for 2022, and also a number of policy stimulus to stimulate the recovery momentum. But these could not evoke any positive sentiments world over. In fact, for rubber, now it is off season because of the seasonal wintering of or leaf shedding of trees or refoliation of trees, rubber trees, off season world over. So supply was low, but still sentiment have been taken down due to the dominant influence of the Ukraine war. So let us go, let us see how the prices perform. We have 6 charts to be shown here. We will see the 6 charts, how the prices performed during last week. We can see right now. We have chart number 1, which is showing the Shanghai rubber futures during last week, daily settlement price of Shanghai rubber futures. In fact, last week, Shanghai rubber futures averaged 1.8% lower compared to the week before. 1.8% lower. When we go into another into Psycho market, chart number 2, Psycho TS benchmark grid is Psycho TSR20. Psycho TSR20 also averaged 1.3% lower. When we go to another chart, RSS3, Osaka RSS3 futures or RSS3 futures traded on the Osaka exchange, the prices average 0.8% lower. So in all the 3 futures market, prices have averaged lower compared to a week before, in spite of the favorable or positive news, because all the positive factors have been overshadowed by the Ukraine war. Then let us go into physical markets. Chart number 4. Chart number 4 is actually we are seeing STR20 price at FOB Bangkok and SMR20 price at FOB Kuala Lumpur. STR20 Bangkok averaged 0.7% lower, means a physical price also came down. This was one point which we have expected when we presented the NR market view 1 week ago. We have pointed out that the Ukraine war and the sanctions announced by the West allies on Russia will have major negative impact on the global economic recovery. Global economic recovery impact will be impacted, means the prospects of global demand for rubber would be impacted. So in fact, that has been reflected in the physical market. STR20 Bangkok price average 0.7% lower. SMR20 Kuala Lumpur average 2.5% lower. Then we'll go to another chart, chart number 5, which is showing the prices of RSS, ribbed smoked sheet or sheet rubber, RSS3 at FOB Bangkok and RSS4 price, local price at Kottayam market in India. RSS3 Bangkok averaged 1.3% higher. RSS3 Bangkok averaged 1.3% higher, and RSS4 Kottayam averaged 1.1% higher. So means in the case of RSS there was a positive, but only 1.3% higher in the case of Bangkok and 1.1% in the case of Kottayam RSS4. Kottayam market referred to the local market, is not FOB price. Then we have one more chart, chart number 6, which is showing the latex price. 2 market, one is Bangkok and the other is Kuala Lumpur. Bangkok and latex latex price at Kuala Lumpur market averaged 0.2% lower compared to a week before. But latex market at Bangkok averaged 1.9% higher compared to a week before. So this was the overall market performance during last week. So in fact, actually, as we mentioned earlier, nearly 70% of the global trade in natural rubber is in the form of TSR, technically specified rubber. So that means when we say rubber markets, we are referring to TSR price because that is representing 70% of the global trade. So roughly we can say that rubber market last week came down nearly 1% with reference to TSR20, which is a dominant grade. One point I missed when I listed the various favorable factors. Another point was there. In fact, actually, Thailand is the largest NR producing countries, accounting nearly 35% of the global supply. In Thailand, the major rubber growing region is the south of Thailand. In fact, there was severe flood in South Thailand that might have disrupted the supply chain in the southern part. So that was another positive factor. Also in Malaysia, east coast of Malaysia was also flooded. So that means that there was some supply chain disruption in the case of natural rubber physical market supply that also could not evoke any positive sentiment. So this was one point I missed earlier. Now, coming to what can happen in the near term, or maybe this week, IMF has already stated that the Ukraine war and the economic sanctions announced by the Europe and US will have major negative influence on the, means they use the word shock, significant shock on the global economy. That means we are anticipating a downward revision in the global economic growth. In fact, natural rubber demand is directly linked to economic growth. If economic growth is going to revise down, or economic growth is going to slow down, that means we are expecting a slowdown in the demand growth for natural rubber. That means demand for natural rubber will be lower than what we had expected earlier. I refer to demand in 2022 would be lower than what we expected lower. So that means the physical market sentiment could be affected. Means this is something very something having negative influence on the physical market sentiment. Not only in the physical market, it will be having negative influence in the futures market as well. Then another important factor. Last week we have seen crude oil prices soaring. So in fact, today morning we have seen crude oil taking a wild jump of nearly 10 to 11%. And in the early morning, it was traded at about $133 per barrel. I refer to Brent crude oil. Brent crude oil was traded at around $133 per barrel, which is close to the historical high in 2008. In 2008, price had reached around $140. And according to analysts, oil industry analysts, if US and Europe are going to have 100% ban on oil coming from Russia, if that is implemented with 100%, oil price can go further up. It is unbelievable, but according to oil industry analysts, it can reach, global oil price can reach up to even $200 per barrel. So in fact, we have to consider that maybe 2 or 3 weeks before, oil was rolling below $90 per barrel. So oil price is, crude oil is actually a lifeblood of the global economy. Oil price goes up means entire economic activities world over would be impacted. Life will be more expensive, and inflation, already world is actually reeling under high inflation, heated inflation. Inflation pressure will aggravate further. So people will have to postpone purchases, or they have to keep off from buying things, or the purchasing power will come down. So this is something going to happen immediately in the immediate future. So soaring oil prices will have tremendous impact on the global inflation, tremendous impact on the recovery momentum. So this is going to have going to dominate the market sentiment in the next few weeks. And then we have to, and then today I received so many queries from people in the industry, rubber industry. Normally, when oil price goes up, rubber price should go up, because when oil price goes up, synthetic rubber is going to be more expensive. So people using synthetic rubber will substitute and switch over to natural rubber. So this is something needs more explanation. In fact, I am coming out with a more detailed explanation on that. In fact, when oil price goes up due to several reasons. One important, when oil price is going up due to economic growth, or means because of the higher demand, that will be reflected in higher demand for natural rubber. In fact, substitution from synthetic rubber to natural rubber is not, is actually, people in the speculative market speculate based on that, but in reality, substitution from natural rubber to synthetic rubber or SR to NR is very much limited because of the technical consideration. Actually, there are several points to be discussed here. Due to the limited availability, I am postponing that discussion to another occasion. Another important thing we have to consider is the global shipping cost. Already it is very high. Global shipping cost is already very high. The war and the Ukraine war and the additional and the further logistic disruptions, especially in the context of the economic sanctions announced on Russia, and also the abnormal increase in crude oil price will further lead to higher shipping costs. So shipping cost is going to be higher. That means that will be another factor impacting on the global inflation. So inflation will go up, one due to fuel price and another factor due to the higher shipping costs. So thus that also will be impacting on the competitiveness of several industries and several economic activities. And we have to consider that all these will be getting reflected on the demand outlook for natural rubber. So that means the prevailing conditions are not favorable for natural rubber to make an upward trend. But at the same time, we have to consider that supply is low, so prices may not go down further. But I would like to say that price lacks favorable condition to go up from the prevailing low condition. And we have to consider that when we go into different market situations may be different. For example, in the Indian market, situation is slightly different from the global market, because in India, as in other major producing countries, it is an off-season of supply, and India is a net importer. Nearly 40% or 45% of the demand is met by import. At the moment, import is more expensive in India. One reason is a higher shipping cost and the shipping delay. Another reason is Indian rupee has weakened. Today, $1 is nearly 77 Indian rupee. So rupee weaker means imported items are more expensive, or importers have to spend more rupee to import things. So that means imported natural rubber will be more expensive, or manufacturing companies within India will prefer to source natural rubber from domestic market. So the prevailing situation of higher shipping costs and the weak Indian rupee is favorable for the Indian markets to gain strength in the coming days. But there are certain issues, certain constraining factor at the same time, because manufacturing auto tire companies in India are reeling under higher cost of manufacturing, because most of the inputs used in tire manufacturing are oil based, not only SR. Several their raw materials used in tire industries are oil based, and oil is more expensive. That means the companies are right now focusing more on the financial performance of the companies and the equity prices. So the companies may be keeping the inventory low. So we can't expect aggressive buying by auto tire companies until the end of March. That means until the quarter, until the last quarter of the fiscal year is finished. We can't expect, but factors are favorable for the Indian market to improve in the short time. So that's all about the NR market review. We will see again next Monday at the same time. Thank you very much.
Okay, that's the natural rubber market review by Mr. Jom Jacob. I'd like to introduce about one of his activities is the NR Dialogue. We are doing a program called NR Dialogue. It is basically focusing on the regional natural rubber markets, what's happening. So we are having an NR Dialogue on the 24th March 2022 at 9:30 p.m. Singapore time on focusing on the Latin America natural rubber industry. This program is hosted by Mr. Jom Jacob. He is invited. He's invited 3 specialists from the Latin America to talk about the situation in the Latin American natural rubber industry. So I request you and suggest to all of you, if you're interested in the Latin American natural rubber market, please do register for this program on the 24th March.